What's up, everyone? Eric here for Redwood North Trading. Today is the 2nd of December 2020. That means November is officially over, and I just wanted to walk you through the November 2020 trade performance for the month. This spreadsheet should be pretty self-explanatory, but I'll just take a second here and kind of summarize everything. Really what we're looking at here is this blue summary box at the bottom. Start off here, we had 13 trades of one contract each. I averaged $74 profit per contract for a total of $958. That was an average of 46.6% of my max profit. That's pretty good considering I had to close this PFE trade early because they sold off part of their company and I was going to end up with two different positions. But then this PFE trade right here ended up being a weird situation where they were selling off part of their company and I just had to close it out early because it was going to end up with a weird two option position in two different companies. So anyways, 46.6% average of the max profit. Pretty happy with that. This month out of the last three is by far the lowest on the return of capital of only 7.7%. The previous 2 months were 11.6 and 13.2%. The return on capital per day is 3.8%. However, that gets a little skewed because of this first solar one that I opened and closed in like 5 hours. So really I should drop in like a 1 day here, right? So then that changes to a 1.7% average, which is still pretty good in my opinion. Another way to look at this, if you were able to repeat these trades for 30 days, you'd end up with a 50% return on your capital in 1 month. I realize that's hypothetical, so take this for what it's worth, which might not be much. It's just a different way to look at things, right? So then this average for these 13 trades, I was in these for 12 days and 5 hours, so about 12 and a half days, give or take. That was definitely aided by some of these puts here and these calls. I mean, that was 1 day, 5 day, 2, and 3 days. So those were real quick. Otherwise, the rest of these, you know, this is about 4 weeks, 3 weeks, 3, 3, 2, 3. And then this strangle and PFE was only 6 days, but that's because I had to close out early because of that weird situation. Anyways, average about 12 and a half days. I had 6 strangles, 5 puts, 2 calls. The required buying power at open was 13,515. Granted, not all of these trades were concurrent. I mean, like these trades here, like these two were closed before this trade even opened, right? So even though this takes over $3,000 in buying power, you only had this one open at the same time, right? If you needed 13,000 buying power at open, you know, maybe your account size would need to be about $15,000 because you'd want to leave room for the fluctuation in buying power with these naked premium trades, right? Since your risk is undefined with all these trades, your buying power can fluctuate if they go against you. And lastly here, the grand total of 13.5 and the 958, you take 958 divided by 13.5, and that gives you a 7.1% return on capital for the month. Now in some ways that's not bad, but in other ways when you compare my previous months, that's nearly half of my best month. For instance, last month I ended up with about $1,000, but I had an 11% return on capital, right? So I only needed like $8,000 or $9,000 I think here. Let's look real quick. Yeah, 8,700 with 11.6%. And then this one I only used 5,800 total and I got 13.2% in September. So I ended up with almost $1,000 again, but I only got 7% ROC. A big reason that this is lower is because due to the vaccine positive news, I have several trades still running right now and a couple more I had to roll to December or even January because the big move in the market kind of prolonged those trades, right? It's putting pressure on the strangle, or if I had a put or a call, it's putting pressure now on those. Mostly everything went up, right? So if I had a naked call, it's now putting pressure on that. So I had to either roll it out or I'm just sitting in the trade longer because now it's near the call. And the same thing with the strangles. The call side is now getting upward pressure. And so even though I'm still within my strike range, like I have a trade going in RCL and UAL right now, 2 trades, and they're within the strikes, but it's just got pressure on the high strike, right? So it's now I'm just stuck in that trade longer. So, and both of those are real low buying power, more like this 400, 500 somewhere in there. And so if those are factored in here, this could jump up to 9 or 10%. So anyways, not really making excuses, just explaining how things work. Sometimes your ROC is higher in the low teens, or it can be lower down here at 7%. So considering this is still quote unquote a bad month, I'm still bringing home almost $1,000, 7%. It's pretty good considering the average stock market return is like 8 to 10 or maybe 12% per year, right? I just got 7% in this 1 month. You take 7.1 times by 12 months, that gives you an 85% return on capital for a whole year. Obviously way better than 10 or 12%. Even in good years in the stock market, you're at like 30% on the S&P 500, I think. And that's like an extraordinary year, right? I mean, the fact that I still brought home 7.1% over this last month, which was pretty crazy with the vaccine announcements. There's these up and down moves. I mean, just go back and look at the S&P 500 and there's this huge like W shape at the top near the all-time highs. And that was like the last couple weeks of the month. And I still came out ahead in 13 trades for nearly $1,000 at 7.1% profit. So I'll take that. This is kind of a crazy month in my opinion. And lastly, one note here, kind of one caveat. This Etsy trade that's highlighted in yellow, I did not get a trade alert out for this. So if you're being the technicality police here, this trade shouldn't count. If you delete that out, you end up with an 856 total profit and a slightly lower 6.9% total return on capital. And also, some of these other trades were older before I started this YouTube channel. So like EFA, JPM, XLK. Basically these first half were not. Oh yeah, PFE was my first one. So this month only PFE through Square was part of my trade alerts. But that's only because I had these going before the YouTube channel started. So anyways, I guess that leaves a couple caveats really. Like I said, I started tracking this stuff closer here in September and now October and November. And going forward, I'm alerting pretty much all of my trades. Every now and then, for personal reasons, I can't get to an alert for a day like this Etsy trade. I just couldn't get on it. And this was over the Thanksgiving week right here, 11/23 through 11/27. So Thanksgiving was like what, on the 25th or 26th, I think. So yeah, I just wanted to be transparent with everything. I'm not trying to pull the wool over anyone's eyes or anything. I'm not selling anything here. I have nothing to gain on this. Started this channel, A, to kind of just help myself track things, and B, to help other people hopefully learn how to do this same system and make some money. I guess one last note here, if I take the average total return on capital for the last 3 months here, November, October, and September, that I've been tracking, I end up at 10.6% return on capital. That's pretty good in my opinion. I mean, if you made 10% a month for 12 months, that's 120% return on capital each year. So you would more than double your money instead of just getting like the average 8, 10, 12%, even on a good year, right? I just said S&P, I think a couple years ago, had like a 32% return on capital. So if I end up with, quote, just 10% each month, I'll take it, man. I'm going to double my money every single year. And that's awesome because, again, this system's easy in my opinion. It doesn't take much time. Once you learn it, you can be in and out. Stuff moves relatively slow, so it's not like the high pressure day trading stuff where you have to be in and out in a minute or two, or you don't have to time your entries perfect or you time your exits perfect. If you only want to do a few trades a month, it's even easier. I mean, I'm trying to do a trade like nearly every day, opening and closing a trade. If you want to scale it back, it's even easier. Anyways, that's all I've got. If you have any questions, let me know. I don't think I missed anything. Oh, I guess this chart here at the bottom, not very exciting, just kind of goes up and up and up. So if there was any losses, it would go down. This little flat line here was like the $14, I think here. It didn't jump up very much. But, if there's a loss, it would zigzag down and then go back up. This now makes, I don't think I've lost a trade in like 4 months. I have had to roll out some trades, which then didn't give me very much return. Like this EFA trade, I may have had to roll that out. I can't quite remember. Actually, probably not, because that says it opened in October. But anyways, I have had to roll some trades out. Like I said, for November, I definitely had to roll a couple out. So even though I technically don't lose those trades, I ultimately win, $20 or something, or maybe $50. However, I'm in those trades for like 2 months. So it's kind of this 6 in one, half a dozen in the other scenario, right? I mean, when you roll a trade, it's a known entity, so you know the direction of which way the trade's going, right? So if you're down 300 bucks, you can roll it out to the direction the trade's going, and then you win back the $300. So even though you end up break even, you actually gain back your loss of like 300 bucks, right? So that's worth something. Anyways, kind of rambling here. Just want to clarify when I say I haven't lost a trade in, 4 months or whatever this is. Yeah, I haven't lost a trade since August, even though I've only tracked September, October, November. Again, there's a few small caveats there. Just some trades last a lot longer and then you kind of break even on them, which obviously you don't want to see happen, but at the same time, you're not losing money. Especially if you leave enough slush fund with your buying power, you essentially can roll these trades out almost forever, because once you know the direction of a trade going, you can essentially just roll it out forever, kind of, and you basically can't lose. I mean, obviously there's exceptions to the rules. That's why I like this system. You just leave enough buying power to adjust your trades later if they go against you, and you can just adjust them out and either come out a small winner or gain back most of your loss, and then you lose, like 20 bucks instead of 300 bucks. All right, that's enough for now. Thanks for tuning in, and I'll see you in the next video.